I'm not a guru and I'm not an expert, but I have made 5 figures from trading. And so today I want to talk about how to actually start trading, whether that's stocks, forex, crypto, etc., all these different markets. How can the average person who doesn't have great finance knowledge, who isn't very smart, how can that person partake in these markets? Understanding the basics is super important. And there's a lot of different sources that you can find them from, whether that's trading books from historical traders who have laid out their ideologies and their approaches for trading over the years. On the Baby Pips website, there's a lot of different resources available. See, there's chart patterns, reserve requirements, algo trading, candlestick patterns, central bank. All of these are foundational concepts when it comes to trading forex. What's really going on in the world that has a large effect on what you're seeing on the charts. You don't need to go through every single article on really any given website, but you really do have to collate this knowledge and understand like what is it that you're dealing with here. So here we can see that the European Central Bank is a central bank that oversees monetary policy. We can see which countries are involved. This is really contextual detail that is beneficial when understanding the currencies. Now, after you do that, you want to start looking at technical analysis. And the reason for this is that it's really helpful to be able to look at a chart and get some type of understanding about what's going on just by looking at the candlestick. There is more to it though. Fundamental analysis is really important as well, especially because there's going to be news events happening throughout the week, every week, that impact the price fluctuations that you see. But just as a starting point, find an approach that works for you. There's many different approaches to looking at a chart. Technical analysis is relatively subjective. So multiple people can look at a chart and see so many different things. And so that's when you're going to get a bit confused if you're trying to trade every single type of strategy. So find the ones that you enjoy and dig deeper into them. That brings me to the third step, which is to find YouTubers. I recommend finding 3 YouTubers that you really enjoy and they really resonate with you in terms of how they explain things, and just consuming all of their content or as much of their content as you can. So let me show an example of this. So this guy has been making videos for a very long time. I would just watch his videos. I would look at his approaches, his strategies, try to understand what is he saying here. He likes to trade what he calls naked forex. So he doesn't look at any indicators. He just focuses on pure, like what's going on with price action. He also likes to look at price sentiment. So figuring out how are traders feeling about different pairs. With each strategy, there's going to be different aspects that may resonate with you or may not. So I would just go through, look at support and resistance, how traders build accounts quickly, what is a shadow trade, forex reversals without indicators. So all these different ideas, just getting a sense about how that person sees the charts, how that person trades, and then deciding what resonates with you and what doesn't. So here's another channel that I like. So this person talks about how to trade centered around the sessions of the day. So looking at the New York session, the Asian session, and finding those opportunities to attack highs and lows of the day, highs and lows of the week within different time frames. There's tons of different videos on this channel. He's been making videos for years and years. And what he does is he'll rinse and repeat that same concept, which is really about finding trades that have asymmetrical risk reward ratio. Look here, the simplest day trading strategy for consistently profitable trading. So in this video, he talks about what he sees in this chart. It might just look confusing at first because you just see random candlesticks going up and down. But then once you get to understand what is being explained here and what's the approach, you get a better sense about what really makes sense to you. Taking notes is super, super important. So what I did was I read the basics. I found some strategies that I enjoyed. I found some YouTubers and took some of their concepts. And then I took notes about all these different things. So I looked at the sessions of the day, a bit about fundamentals, a bit about economic stability factors, and then I would take screenshot snippets of different concepts. So I traded Elliott waves a bit. I've also looked at kind of like these price action patterns. So looking at shapes that form on charts. These are very subjective, and I really do enjoy the retail trading concepts personally. So that's just me. Intraday triangles, triangles on the chart, trading with the RSI, looking for divergence, harmonic patterns, looking at these different ratios. I really enjoy harmonic patterns personally. Many people might not. I don't really see many people trading harmonic patterns unless they're kind of more old school. And this is just one page of my notes, but it's really important to take screenshots and understand what you're seeing in the chart, because then you're going to get a better sense about what is actually happening and how patterns that you've seen before begin to duplicate themselves, because really there's nothing new. All this knowledge begins to accumulate the more that you look at charts and you build on the concepts that you've learned over time. So take notes and then mark up charts. And after you mark up the charts, you can then begin to trade demo before you eventually, get into trading the real thing. So I just wanted to show a quick example of what this looks like once you're actually looking at charts and really trying to bring all these concepts together. Okay, so right now the London session is about to open, and here is what the chart is showing right now. So I'm looking at the New Zealand yen right now, NZD/JPY, and there's so many different things you can see here. I mean, when I first looked at charts like these, I had no idea what they even meant. But over time, I began to implement some of these concepts. And here's an account that I have right now. I'm actually in a trade on the euro dollar. Very small account, by the way, but I'm in a sell, and I'm going to just have to wait and see what's going to happen. I should actually enter a stop loss. Okay, so right now I'm looking at the New Zealand yen, NZD/JPY. The London session is about to open, and there's a few different things that can be seen right now on the chart. First of all, you'll see that the Asian range has been pushed past. So we are about almost 10 pips, or 9-10 pips above the Asian range from earlier tonight. There's a lot to see right here. Let's see what some of these indicators might say. So if you wanted to trade harmonics, let's see if there's any harmonic patterns. Okay, does not look like it. Okay. Yeah, so no harmonic patterns, okay. So no harmonic patterns. If we mark up a chart, we can see that we have some of these zones. So there's a bunch of bullish candles here. Some people might mark out the details about these candles. They might be like, oh, this is an area to look at. So they might mark it up like that. On the 1 hour, they might go then down further, and they might see something about, oh, well, we're in a particular range. So one of the concepts that you might use is looking at the Asian range and simply trading above and below it. So yesterday's Asian range, price got to be about 30 pips below yesterday's Asian range. So there is an approach where you might look at the Asian range and you might decide you want to enter buys 25 pips below or above it, and have your stop loss be another 25 pips beyond that. So that could look like maybe opening a trade around the 86 flat level, having a stop a bit further than that, and you might have done that and have been in profit right now. 86 flat, right? So price would have gotten to that around the start of Asian session. Another 25 pip stop loss will be there. And what does this align with? Well, it aligns with what are the ranges from yesterday. So another concept is to trade based upon the range of the 717 hours, which means 7 p.m., 1 a.m., 7 a.m., 1 p.m., 7 p.m., and repeating that around the clock. So that's what's marked out here with this gray box. So then you could say, oh, based on that, we're entering a bit below the 618 retracement of the 717 range of the previous day, because that is what is marked out here. And so that aligns. And so some people might call this confirmation. They might say, oh, my strategy says that I should enter at this fib level based off of this range, based off of this concept. Or you might be someone else who decides, hey, I don't want to look at that. I just want to look at understanding, well, where do we have areas of candles where we've seen either a lot of bullishness with no bearishness, or a lot of bearishness with no bullishness. So here on the left side, I'm marking out this area where, and there's a lot of different terms for this, but there's clearly bullish candles with no bearish candle until up here. And so because all this is straight bullishness, some individuals might draw this out and say, whenever price gets back to this area where there has just been bullishness, I'm expecting a reversal. So I'm going to enter buys around that area. And so what you begin to see here is that all these different concepts begin to show up. And so you have to understand which ones resonate with you, which ones do you want to actually use. Once you figure that out, it's then about actually executing and taking positions. So here that would have been a buy. That would have been over 30 pips in profit right now. You're looking at price right now, which is around a significant daily level. And so you can mark out any level on a chart and people might say, oh, this level is significant. The factors that go into determining what makes a level significant vary depending on the concept. But in this case, looks like 86.34-ish. That level is significant for whatever reason. You know, there are some wicks that are kind of ending up near it, but in terms of the nitty-gritty details, it's up to you to decide how you want to kind of interpret what's going on with the charts. A lot of concepts can end up working, but it's about figuring out what makes sense for you. And the way that you can do that is by studying up a lot in the beginning. But trust me, as someone who learned this all online, this is something that anyone can do. And it's really about just getting in the reps. Once you get past understanding the basics and finding these strategies that work for you and the people who actually teach those strategies, it's really about spending most of your time on the charts and most of your time building on those foundational concepts. The first part's about understanding basics, finding strategies, and finding YouTubers. Once you get past that stage and you've taken your notes, it eventually gets to a point where you're really learning the most by looking at the charts and also getting a better understanding about the news events and how they impact what goes on globally. It's not something that is so far out there like you might think it is. It's really just going to be something that takes a bit of practice, but then eventually you get to a place where you're just refining your strategy instead of trying to learn everything from scratch. You don't need to be super smart. You just need to be consistent. If you have any questions, let me know how I can help. I really want to see more people begin to win.